Hey guys, welcome back to my channel. This is Sam, your favorite loan broker. If this is your first time here, I'm a loan broker. We lend in 50 states if you want to buy a home residential or if you want to buy commercial as well, right? Guys, today's video is about uh most likely co-signing what I've been saying, because guys, my channel is about convincing you on why you should buy a home now with proper documents in order to benefit you and the benefits on how it can help your future, right? Also, my video is about the person that's making $5 under minimum wage and trying to figure out, how do I make money? I can't seem to save. Things are not going my way with economy and with different things that's eating up your pockets, right, guys? Also, guys, at the time that I'm filming this video, it is April. Interest rates, I'm looking down at my notes. Interest rates are at 6.3%, right? So just to do on my other videos, I educate you on how to break it down, but in case this is your first time watching this video, I want to educate you on just watching one of my videos, right? Today's interest rate is at 6.3%, guys. If you were supposed to buy a home of 500,000 with, depending on if there is HOAs or your property tax or insurance, right, guys, it would round off to 3,700, right? And for you guys that are waiting for interest rates to go down, right? So don't forget, today's interest rate 6.3. Let's just say interest rates go down to, where do I have it? 4.3. We're taking off 2 points, right? That'll give you a mortgage of a home value of 500,000. That'll give you 3,100. So 37 with today's interest rate. And for you guys that are waiting to buy, let's just say it goes down to that sweet spot, that 4%. You would be actually saving yourself $600 difference. But now don't forget, my video is about educating you on mortgage math on why you should not wait, guys. So now I have two videos here, most likely co-signing on what I've been telling you, but I'm giving you different perspectives, right, guys? Just to educate you guys. All right, 1 second, let's jump into these videos.
There are over 500,000 more homes on the market than there are buyers willing to purchase them. 2026 is about to be an insane time to buy a house. Let me explain. Over the last couple of years, you probably heard the word shortage a lot. Like, there have been national shortages of homes because there are sellers that had 2 and 3% interest rates that were not willing to give up. So they weren't selling their homes. There were people literally bursting at the seams of their home because they bought them as a starter home and then they had kids and now they have multiple kids. And so we're finally 6 years away from 2020 and the crazy rates that we saw of those 2s and 3s. And so people are finally understanding, like, okay, if I want the bigger space and the kids only grow more, then I'm going to have to give up this mortgage rate. Now, what's interesting is when you own a home, every year that you wait to sell, ideally and theoretically, the price of your home should increase because that's how natural appreciation works. But when you're a buyer, nothing's really going up in value. And if you have savings for a down payment in a checking account, inflation is actually eating away at it. So you're like losing money while waiting to buy a home. And finally, the last couple of months, there have been more buyers that are like, I'm kind of honestly sick of waiting for interest rates to get to 2 and 3%. Everyone's coming to terms that, like, that's probably not going to happen again. And now there are more people entering back into the market. I have never pre-approved so many people in January that are going to be the springtime buyers. And the springtime is already a crazy time because as we approach summertime, more people who have families want to buy and sell and move into a house in the summer before the kids start back in school in the fall. And so it's going to get crazy because people are just becoming really impatient with their current status. So all those people who were waiting for rates to drop are like, screw it, I just need to get into a home because I'm literally losing money not buying a house. And the people who are like, I need to sell a house and move up because my family is not fitting in this house anymore, they're seeing that houses that are a step above theirs are just going up in value. Like, I just had a family that went from a house they bought 4 years ago, it was $250,000, and they just bought a $425,000 house, and that only added one more bedroom. So people are starting to understand, like, if I don't make a move now, the market is just going to keep going up. It's not like we're in this bubble. Like, there's no reports that are showing that there's going to be a bubble pop like there was in 2008. So if you're a buyer, your pre-approval has to be on point. Like, I'm talking credit over 640, making sure you have reserves and money somewhere for negotiations. You have to make sure you don't quit your job. So if you're a W-2 employee, then keep your job. It's very important that you do that. Don't become self-employed after you've had a W-2 job. If you're self-employed, look at different programs. Don't just let the banks tell you that they can't approve you. But if you're self-employed, basically don't not get into this market because the bank doesn't know how to do a traditional loan for you.
Yeah, guys, as you can see, great information. I have another video for you that I want to add on to this, right, guys? And it's going to show you the numbers, guys, because on Mortgage Math, I would like to educate my viewers, right? So let's dive right into it.
Go ahead and round that up to $325,000, which, in my honest assessment, is not a bad price at all for a starter home, especially in Columbia, Maryland, because of how desirable Columbia is. So let's go over what the mortgage payments would look like at a 5.875 mortgage rate, which is the standard mortgage rate as of March 2026, which is actually good to see that mortgage rates are coming down slightly, improving affordability. So we're going to use a 3% down payment here. Of course, this is just the bare minimum down payment needed. If you were in a position to do 5, 10, 20 or greater, do that as well. It's going to bring down your monthly mortgage, but we're just going to use a 3% down payment. That's going to be $9,700 roughly. And then we also have to account for closing costs, which typically runs you an extra 3% of the purchase price of the home you're buying. So in this case, it's going to be around $9,700 as well. So the sum of that is going to put you at roughly about $19,000 for your cash needed to actually buy the property. So if we're using this 5.875 mortgage rate, your principal and interest is going to be $1,864. Property taxes is roughly about $328. Your HOA dues for this property is about $514 per month. So that covers things like snow removal, lawn care, trash, exterior building maintenance, and even roof maintenance. Any roof repairs that might come up in the future, it's totally on the HOA, which is great because a lot of times when you have roof issues, depending on the severity of it, trying to battle with the insurance company to completely cover the cost, it poses issues sometimes. So it's good to see that the HOA picks up the responsibility of maintaining the roof. So the total monthly mortgage is just under $3,000 at $2,979 per month. Now, let's talk about what home values have been doing in Columbia, Maryland over the past 3 years. So in 2023, the average cost for a home in Columbia was about $539,000. In 2024, it went up to $554,000, and in 2025, it went up to $578,000. So that's roughly about a 5.4% increase in property values year over year, which is above the national average of 3.5% to 5%. And I think what continues to make Columbia, Maryland a very desirable place to live is what it offers its residents, because it's indeed a suburb, but you still get a lot of elements of city living without the congestion. You've got the amenities, you've got the mall at Columbia for shopping, dining, and entertainment, and you've also got a few lakes for outdoor recreation. So you sort of get that mix of having the best of both worlds. Now let's take a few steps back and talk about that 5.4% annual rate of appreciation in Columbia, Maryland over the past 3 years, because that's nothing to just overlook. So one thing I always tell my clients who might be buying their first home is that in a lot of instances, your first home is not going to be your dream home. And that's completely okay. I'm a big advocate for buying that first house, just getting on the playing field, living in the home for 4, 5, 6, 7 years, the longer the better, and then using the equity you build to upgrade into something later on. Let's use this home as an example. If the current asking price is $325,000, let's say it sells for that price, and home values appreciate at about 5.4% on an annual basis, you're going to be gaining roughly about $17,000 from appreciation alone every single year. And if we add that up over 5 years, we're looking at about $87,000 in equity. Now, of course, that $87,000 figure is not going to be pure profit when you sell the home. You still have to account for closing costs when you sell and all the other expenses that come with selling a home. And you also have to remember that appreciation is not going to be linear year after year. Some years it might be only 3%, some years it might be 4%, some years it might be 5%, and other years it might be 7%. Just depends on how the market is performing in that specific year. But 5.4% is still the average. Let's even use this home as an example. The last time this home was sold was in the year 2020 for $200,000. If the asking price currently is $325,000 and it actually sells for that price, if we do the math from 2020 to 2026, that's an 8.4% rate of appreciation on an annual basis. So even if we're sticking to that 5.4% rate of annual appreciation, which would give you about $87,000 in equity, if we wanted to be conservative and reduce that $87,000 number by about about 25%. That still leaves you with around $65,000, which is still a very respectable down payment towards the next home. And that's exactly why I believe that getting that first home is such a strategic move, because it's often easier to get to that dream home by buying the first home, just sitting on it, letting that equity build, as opposed to not getting the first home and you're trying to save your way to that dream home through, blood, sweat, and tears at your day job. I mean, yes, after many, many years of diligent savings, can you save up your way to your dream home? You absolutely can, but it's going to take you way longer compared to just buying that first home and letting the equity do the saving for you. Because listen, if you've lived on this planet long enough as an adult, we all know something is always going to pop up that's going to derail your savings. You might have family members who need help. You might have car issues. You might owe Uncle Sam some money in taxes. It's just so many things that pop up that could derail your savings. But with a home, all you have to do is just live in it and let that equity build up, especially in Columbia, Maryland, where we're seeing on average 5.5% annual appreciation. Now, for the sake of having a balanced argument, of course, with homeownership, there's always going to be unexpected costs as well. You might have to replace a water heater here. You might have to service the HVAC here. You might have to replace a window or two over time. But that's just part of owning a home. But for a lot of people, the long-term benefit of building that equity could make it well worth it.